Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back. Let's take a look at the gold market. So here situation stands very tricky on the performance. Market keeps valid weak bullish context, but for the conservative traders this will be a big challenge to thinking about taking a position for trading in the current environment. And here's why. So first of all, on the daily chart it seems that everything stands great, and actually the grabber that we talked about recently has been formed. So we said if you would like to take the position, wait at least for a retracement. Yesterday we discussed this retracement. And then watch for a grabber, whether it will be appeared or not. On the first glance it has appeared, but if you take a look at futures, you will see that we do not have any grabber here. This is the first tricky moment that we have. Yes, you could say that futures market is a bit different, especially with the higher interest rates compared to the spot, but we do not have adequate spot market because all the spot quotes providing from the retail brokers, which keep them different depending on where they are getting who is actually the data provider. So that's why only related more or less reliable source of the information is the futures on the comics, where we do not have the grabber. So this pattern stands under question. Now if we go further, you will see that the performance on the lower time frames absolutely different compared to what we have on the futures and on the retail brokers chart. So on the fall time frame chart here, you could see the market has formed some bullish grabbers, and potentially, since it keeps although it is weak, but it keeps bullish context on the daily chart, we should consider this performance from the point of view of the bullish context. And with this downside reaction, which seems to be deep, and in general it is bad performance for reverse head and shoulders pattern, market still stands above this A point, which keeps the 4-hour time frame pattern still valid, despite that here we have some mess that we prefer do not see. So of course we prefer to get some straightforward upward action completing of the shoulder and upward continuation. Here we do not have it, but at the same time it still keeps potential bullish context, and here we could suggest few patterns that might be formed. First of all, it might be the ABCD. It also might be here some kind of the butterfly pattern, and later market could form even larger butterfly with this left wing in place, right wing in place, if we will get the corresponding background and some drivers for the gold market that could push price higher. At the same time, on the futures market we have absolutely different performance. We have few bearish grabbers here, suggesting the taking out of these lows, which means downside drop. But particularly these lows is, I would say, critical for this short-term bullish context, because when you are dealing with this reversal pattern, market already has shown moderate retracement, starting upward action, and return rate back down, breaking these lows. This obviously will be the step in favor of the bears and the failure of all this construction. That's why the first conclusion from the current analysis that I would use these lows as some kind of invalidation point, and if I would consider taking the long position, I wouldn't place stop lower than this one. Well, since they are stands very close, theoretically you could place below the A, but in the current circumstances this is not unnecessary. This is not necessary. So this first point to mention. Second one, if you take a look at the hourly chart, here is actually retracement that we were speaking about has happened, and the patterns have been formed that we talked about. Let's take a look. ABCD butterfly, but it has dropped lower to the 2020. So we said 2020, 2025. Well, in general, market was able to stay above it somehow, just completing the XOP and 1618 extension of the butterfly. Upward reaction also was relatively fast. So let's say that this level was able to stay. Currently, market shows this upward action. Here's minor grabber might be formed if market will close somewhere above this area, slightly higher. So as you could see, overall background for the bullish trade seems tricky. So it's not very clear, and well, and for conservative traders it might be some stress source. So that's why the choice is up to you. Currently, we're not considering taking shorts just because, well, here the bearish background is not ready yet. I would start considering taking shorts position if market will take it out of this lows, as I said. Why? Because in this case, it's not only the second attempt to go higher will be lost, but at the same time, if you consider this, you could see here this big downside pattern might be formed, right? So it might be the butterfly. So once market will start breaking its lows, it, by the chain reaction, could trigger failure of the whole and shortest construction and push pricing lower below the lows. In this case, it will lead to some deeper retracement here, maybe 1975 area will be completed. Other words speaking, the bearish grabber that we have on the weekly chart starts working. So that's the real bets that we have on the table right now. And from that standpoint of view, with all the stuff that I just have explained, the choice of the whether to take position right now alongside or not stands up to you. So nominally we have bullish context, but it has a lot of tricky moments. If you are ready to take this risk with the potential, you could calculate some corresponding loss that you could take depending on your position value. If you're ready, so you could try. If not, well, in this case it would be better to wait for more clarity and probably postpone some activity on the market on the next week. So that's the conclusion that we could make currently.